Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we're going to start the show by reviewing the pairs trade that you put on last week. And pairs trades, for some, including myself, have always been difficult to grasp. So let's just quickly run through and whether that trade is in fact still open and how it's working out.
Yes, okay, it is definitely still open. It was a pairs trade between Pioneer Foods and Zeda. Now, you can see the graphs of the two shares on the screen at the moment, and you can see that they track each other very closely, as you would expect they should do, because majority of Zeda's market capitalization is made up of its stake in Pioneer Foods Group.
Yeah.
So if you actually have a look on this table over here, there you can see the constituents of what make up Zeda. Now, keep in mind, Zeda is an investment holding company with assets in the food and food processing business, really. But you can see there that the Pioneer Foods investment makes up for more than 72% of Zeda's market capitalization. So it is therefore understandable that the two shares should track each other very closely. But what we've noticed over the years, and certainly over the last 2 years, it's very clear here if you look at this graph now, is that there's a sort of a deviation between the two share prices, and the deviation can be as much at times as much as 15%. And really, it's quite an interesting dynamic, and you can trade this using a pairs trade, and that's exactly what we've done here. So just to put you in the picture, this graph here, I mean, I know it just looks like a bunch of up and down lines, but what it is the Pioneer Foods share price divided by Zeda. And you can see that the ratio of the two track each other between a low at about 18.5 and a high of 22.3. And you can see it oscillates up and down between those boundaries. Now, where it is currently is up towards the upper end of that range. And what that implies is that by historical standards, Pioneer Foods is overvalued relative to Zeda, or you can interpret it the other way around. You can say that Zeda is showing a significant discount relative to Pioneer Foods. And we would expect that ratio to come back in line. We'd expect it to move back towards the middle of that sort of range, and possibly even at some stage to then have an overshoot in the other direction as well. So what you do to capitalize on this is you take a pairs trade where you go short on Pioneer Foods, because that's the one that we deem to be overvalued, and you go long on Zeda. All right, and what we're looking to trade is the relative between the two stocks. Effectively, we're actually trading that graph. We're looking for that graph to now come down back into the middle of the range.
Okay.
And we did that last week. We did a nominal value of 100,000 Rand in each direction on Pioneer Foods and on Zeda. So we went long of 592, short rather, 592 CFDs of Pioneer Foods, and long 13,262 CFDs of Zeda at the prices that are illustrated on the screen there. And that left us having done the trade at a ratio of 22.39, which is right at the top of that ratio on the graph that I showed you previously. Now, where do we stand currently? Well, currently Pioneer Foods is 165 Rand. So we're showing a small profit there on that leg of the trade, just over 2,000 Rand.
Okay.
And then on Zeda, the price currently is 7.33 Rand. And we're showing a loss there of almost 3,000 Rand. So net, we're around about 900 Rand down on this pairs trade as things stand at the moment. It's not really bothering me that we're down. Our stop loss is if this trade moves by 6,000 Rand against us, which is still a long way away.
And Garth, you did say last week that you would be prepared to have just one leg of the trade work out.
Yeah, that's right. Very often on a pairs trade, you won't make money on both legs. In fact, it's highly unlikely that we're going to make money on both legs of this trade. We'll lose money on one leg, almost certainly, and we'll make money on one leg. And the key is that we need to make more on the winning leg than what we lose on the losing leg at the end of the day. And then you consider the trade to be a success. That's the whole point of a pairs trade. And the thing is, because these two are paired off against each other, and they're almost one and the same thing, essentially, it does, to a large extent, mitigate market risk. If the market was to crash in a heap, you'll find that this pair shouldn't really move out significantly. It'll be relatively well protected. And just a note quickly, we've noticed, and I didn't know this actually last week, but it's become evident subsequently, Pioneer Foods is going to be included in the industrial index of the JSE, and that is as from the 23rd of March. So what you'll find right now, and it explains the strength that we're seeing in Pioneer Foods, right now there's a lot of buying of Pioneer Foods by tracker funds as they look to re-weight to get their weightings online. So they're needing to effectively stock up on Pioneer Foods in order to get their tracking correct on the industrial index ETFs.
But isn't that going to be bad for us? So if you're short on Pioneer?
Well, it would be bad in a sense, but I think it's already being felt. And the thing also to remember is that it doesn't really matter. I mean, it's just that's a point of interest, but it doesn't really matter too much. The relationship between Pioneer Foods and Zeda should nonetheless continue to track each other, as I illustrated on that relative strength graph.
Okay, so you're in the pairs trades, happy to stay in for the time being?
Absolutely, I'm happy with that trade. I still think it's got a pretty good chance of working for us.
Okay. Interesting that this week's trade is a long position in Telkom, and Telkom has been a fascinating share. If you'd been long of it, I don't know what, from about 15 Rand, you'd have been incredibly in the money, but it's had a very sharp and aggressive correction over the last couple of days. What's going on, and tell us why you like the look of the chart.
Yeah, I think from a trading point of view it's interesting, and you're right. I think Telkom's one of those shares that's performed very well over the last 2 years. Against some people's expectations, I think, but it has done phenomenally well. Anyway, I mean, from a trading perspective, we obviously looking at this on a very short-term basis to try and identify a short-term trade. And I see a potential trade here now because the share price has come off 20% in the last 4 trading days. And what we understand that is there was a downgrade by one of the big international broking houses, and that came out late last week. And I think that spooked investors a little bit. But very often you do still find that share prices tend to overreact when this type of thing happens. And I think that that's what we've seen here. So if you have a look at the graph of Telkom at the moment now, you've got a very steady uptrend that joins all the lows. And actually those lows go all the way back to the beginning of 2013. It actually goes back even further back than what I've shown on this graph over here. So there's quite strong support in that area around 69 Rand offered by the uptrend. And then there's also what we call an area of congestion, which is where the share price basically tracked sideways through December and January of this year. Also in the area around about 70 Rand, 65 Rand, that sort of zone. And the share price is now pulled back all the way from about 85 Rand. We now sit 4 days later and it's sitting just underneath 70 Rand. So it's had a very, very deep pullback in a very short space of time. And that has kind of come with, I think, what I see as some fairly aggressive, almost capitulation type selling. And what's interesting to note on this is if we go and we look at the hourly graph now, that previous graph was a daily graph. This now is actually an hourly graph, so an intraday graph showing the short-term trading action in Telkom over the last couple of days or so. And what you can see there is that this is actually a screenshot off my IG Markets trading platform. So you can pull up, if you're a client of IG, you can pull up these graphs yourself as well. So every candlestick pattern on that graph represents 1 hour worth of trade. Now what's quite interesting to note is you can see obviously the aggressive sell-off that we've seen from 85 Rand all the way down to underneath 70 Rand in just 4 days. But what's very interesting to note is have a look at that volume spike that happened yesterday. And you can see that the candles around that in terms of the volume were also pretty large. We had essentially 2 or 3 days of unusually large volume trading in Telkom. And that was coincided with this massive pullback in the share price. And I always get fascinated by these volume spike situations because what a volume spike represents is a massive transfer of ownership between shareholders. So on the one hand, you've got people that obviously were long of the stock, we're holding it. It now declines 20% in 4 days, and suddenly you get some fairly aggressive selling. Now, for whatever reason, but I think it's fair to say that there's a bit of capitulation there, a bit of panic selling maybe, and to a certain extent, maybe a little bit of irrational selling. And that's evident by the fact that the selling pressure actually accelerates as the price goes lower. The volume increases as the price goes lower. So you've got all these panicky sellers essentially getting out of the stock. But you can't just have selling pressure in order to see a volume spike like that. You also have to have buyers on the other hand. So now, what are the buyers thinking? Well, clearly, the buyers are looking at this lot and thinking it's oversold, it's a bargain, it's an opportunity to try and take advantage of a bounce in the share price from here. And you get the two very diametrically opposed views between buyers and sellers. And what typically happens at the end is the sellers can't sell forever. Eventually, they kind of run out of stock to sell, and they exhaust themselves. And once the sellers have exhausted themselves, then what's left behind afterwards is all those shares that used to be owned by the aggressive, panicky sellers are now in the hands of new shareholders who've bought them at a good price. They've paid a perceived bargain price for these shares. They are far less likely to want to panic sell that share. So what typically happens once the dust has settled in this type of situation is that you get left with a vacuum of selling pressure, and that then causes the price to rebound, because anyone who then wants to buy this share needs to actually pay up.
And when you talk about rebound, we generally talk about a bounce rather than, you're looking at trading this purely for its bounce value.
Yes, that's right. We're looking to trade the overreaction here. That's all we're trading. I'm not going to be, looking to stay in this trade for long. Usually these type of trades last for a week, maybe just over a week at most. But if we take the study a little bit further, what was quite evident yesterday is that we saw an hourly reversal candle which coincided with that volume spike yesterday. So what that told me was that the sellers had actually probably exhausted themselves at that stage, and we're now starting to see the share price rebound, and the likelihood now is that we've actually seen the dust settle, and this is where the rebound starts. So I went along this morning and I bought for our portfolio at 70 Rand. And I'm using a stop loss of 68 Rand. That stop loss basically implies that we would need to go and breach yesterday's low point when that selling was at its fever pitch.
Yeah.
All right. And I'm looking for just a quick bounce to 75 Rand here. Okay. That's all.
So it's quite opportunistic, this trade.
It is quite opportunistic. Absolutely, it's opportunistic. But these types of situations I find where the market tends to overreact in one direction, they are quite nice trades, because very often you get your result very quickly. And you can get a decent risk-to-reward ratio. I mean, we're looking at a 2-to-1 risk-reward ratio on this trade. So I think it's worth pursuing. But having said that, we're not taking our maximum risk on this trade. We're only going in with a half size, just because it is, as you say, it is rather opportunistic.
Yeah. Okay, well, take us through the mechanics in greater detail, Garth.
All right, so I've gone long. I've bought at 70 Rand a share. The stop loss I'm using is 68 Rand. The risk per share, therefore, is 2 Rand per share. The 1% of our portfolio is 2,950 Rand. That's what we would be willing to lose if this trade doesn't work for us. All right, so I take that risk, the 2,950, and I divide it by the risk per share of 2 Rand, and that gives me 1,475 shares, which, because of there's a 1-to-1 relationship between shares and CFDs, it means I've bought 1,475 CFDs. My target here is 75 Rand. And my risk-to-reward ratio, therefore, is 1 to 2.5.
Garth, and just going back to trading these 3-day moves, if I recall correctly, we had a trade on Pinnacle last year, and it was quite a successful trade, and it was the third, after that sort of 3-day period. He managed to get a nice little bounce out of that. Yes,
that's right. We traded that 3-day rule a couple of times last year. We did it once with Pinnacle, and I think we also did it with Steinhoff last year. Yeah. There was a 3-day scenario there as well. And the principle was absolutely the same as what we're seeing here. Basically, we're just looking to try and capitalize on an overreaction to the downside in the share price.
Okay. Garth, before we have a look at the portfolio and end up, I just wonder what your thoughts are on the market at the moment, and also the Rand, because the Rand has had a bit of a blowout in the last couple of days. It's unfortunate that you weren't short of the currency, because you were at the beginning of the year. Your thoughts? Do you think there might be some sort of vicious correction as much as a vicious downturn?
Are you saying that the Rand gets stronger suddenly?
Yeah.
It might. Look, I think you're a brave man to bet to go long of the Rand. I mean, I always think we're all long of the Rand anyway, because we live here. Our assets are priced in Rand, so we're all naturally long of the Rand anyway. It's disconcerting when it weakens the way it has suddenly. But it's very much a story of actually dollar strength, more so than Rand weakness. Yes, the Rand has weakened a little bit against the pound and the euro, but we've really been hurt badly against the dollar, and that's more a function of dollar strength, because there's this view out there now that US interest rates might start to rise sooner than what was originally anticipated.
Yeah. Okay, well, we'll be watching with interest. Garth, so what does the portfolio look like to end off with?
All right, it looks like this. We've got 294,000 Rand in our portfolio at the moment. Those are all the open trades that we've got currently. So we've got this March Aussie option structure that expires in about 2 weeks' time. And in fact, I've put another trade on for the June contract, which will probably probably talk about on next week's show. Then we've got our Pioneer Foods and Zeda pairs trade, which is making us a small loss there, and then the Telkom trade that we've just entered today. So we're still up, close to 18% for the year to date. I'm pretty happy with that, and we just need to manage these trades that we've got on currently.
Okay, great. Garth, we'll leave it there. As always, thanks for joining us on the show. That is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.